The best way to trade breakouts. Welcome back, everyone. I'm lead trainer with StocksToTrade, Tim Bohen. So I know a lot of the times breakouts can get good and bad reputation. Like, I think the biggest reason that buying breakouts gets called chasing is people buy random breakouts. Like just stocks with no news, low volume. They break out on the daily and then people pile in and then the stock goes nowhere and they're like, buying breakouts doesn't work. One thing that I do and teach is if you know what to look for the criteria for a good breakout versus just a random popper, they create massive opportunity. And the nice thing is we get several of these a day, and all it really takes is patience. Like when you hear chasing and buying breakouts doesn't work, it's simply because people show up, and I see this every day. People show up, they're like, hey, what stock are we buying? You know, they don't do any research. They see some yahoo in a chat room mention a ticker, they buy it, it fails to break out, and then they're like, breakouts doesn't work. And it's like, well, yeah, brother, you just followed some guy you don't even know in a chat room. You didn't even check if the thing had news. You didn't look at the volume. You didn't look at the chart pattern. And yeah, in your instance, buying that breakout didn't work. So the other thing I love about what I'm going to talk about in this video is this is an afternoon pattern, okay? And the nice thing about afternoon patterns is the odds of success are much higher. Now, the one drawback is that you don't see as many afternoon breakouts as you do morning breakouts. Now, that might sound like a negative. You might like, oh, that's a bad thing. But remember, as a new trader, one of your biggest goals, and people don't like this when I say it, you should be forcing yourself to be as selective as possible. Like, if you see people on social media or in chat rooms making a bunch of trades a day and they're doing well, odds are, if you ask them, you'll probably be like, hey, how long have you been trading? They're gonna be like, oh, 10 years, 5 years, 15 years. So remember, comparison is the thief of joy. Like, so when you see somebody doing really well, trading a lot, you might not realize that they've been doing it much longer than you have. And it's a trap I often see traders fall into. They think more is better. To me, as a newer trader, and that's who I mentor, is less is more. Like forcing yourself to be extra selective. Like, if you know me, you know I like to hunt, okay? I know hunting can be a hot button issue, but hey, I love to do it. And this is where I bring out like the hunting analogy. So I know some of you might understand hunting, maybe you don't, but like the way you do it as a good hunter, as someone that cares about, managing the herd, etc., is you're very selective. You don't just go out there like on Bambi and start blasting anything that moves. You have cameras, you have, tracking, like you're looking to target a specific, in this instance, deer hunting, whitetail deer hunting, a specific buck that you know that is mature, that is that is something that you can take an equitable shot on and be happy with what you did. And it's a lot like trading. We don't just blast anything that moves. If you blast anything that moves, you're probably going to lose a bunch of money and you're probably going to give up. So have that hunter mentality where you're like, I'm only going to take the shot if all the stars align. And maybe today I don't get a shot. And there's a lot of days I go out to that tree stand and I sit there and play with my phone for 4 hours because there's, the buck doesn't walk out. Successful trading, especially in the new beginning, is a lot like that. You might sit there, spend a bunch of time, and never even make a trade. But there's value in that. We call it seat time, like in a seat. You're still learning pattern recognition. You're still getting experience. And remember, back to the hunting analogy, sorry, but your buying power, your cash in your account is much like your ammo. Okay, hear me out. So if you have a limited number of ammo, which most of you do because you're just getting started, do you think it's a good idea to go out there and just blast at anything that moves? Oh, a leaf blew, I'm going to shoot at it. Oh, a stick moved, and I'm going to shoot at it. No. If you have a limited amount of ammo, you need to focus on the best opportunities. So that is where afternoon breakouts, I beg, and you've probably watched similar videos of this on the channel, where I tell new traders, focus on the afternoons. Now, much like hunting, there may be no opportunities this afternoon. There just might not be any. But especially if you're under the pattern day trader rule, especially if you have a small account, you need to be selective. So let's go back to the things we look for that create our higher probability of success. What we're looking for, stocks that have news. I mean, that's one thing that drives me nuts when people say breakouts don't work. There's no catalyst behind it. Now, you might be saying, well, Tim, sometimes stocks move on no news. Sometimes. It's rare, and typically they pop and drop right away. The idea behind a catalyst is you want something for all the traders and investors and swing traders to be like, oh, hey, look at this. They just announced a new deal with Apple, okay? Like, this is something of substance. So that traders will go back and look at that and be like, oh, hey, look at this stock continue. They got a deal with Apple. Next is unusual volume based on the 60-day average. Now, this is built into StocksToTrade. You can do this in pretty much any trading platform. What I want to see on a good breakout is exponentially higher volume that day versus the 60-day average, and that basically looking at that 60-day window. So you'll see a lot of these stocks with news that maybe trade 1 million shares a day on the 60-day average, and then you come in today and it's trading 50, 70, 100 million shares. So that tells you that obviously there's interest in this stock. People want to get in this thing. Yesterday it traded 1 million, today it's trading 50 million. That's again a trap I see people fall into. It's trading its average volume or maybe slightly above. Like let's say it's trading 2 million shares. Well, that's just barely above the average. That tells you that the market's not in love with it. And remember, the market's always right. So high volume breakouts, catalysts, and then hot sectors. Like, now remember, there are times when we don't have a hot sector. Like usually it's about a week tops where there isn't a theme. Now, I would tell you as a new trader with limited ammo, trade less during those times. Focus on hot sectors. When there's a hot sector, you'll know it and you'll be ready, and that's when the real money's made. Like right now, literally right now, EVs, electric vehicles, are back big time. Tesla, ripping. If you look at the chart of Tesla, it's going crazy, big bounce off the lows. We had about 6 electric vehicle runners on Friday. It's the theme. So now, high volume stock in the hot sector with a catalyst. Does that guarantee the stock's going to follow through on the day? No, but it increases my odds. And as traders, that's all we can do. Stack the deck in our favor. So look for breakouts on the daily chart as well as the intraday chart. The 3 time frames I recommend are the 2-day, 5-minute chart, the 2-month, 15-minute chart, and the 1-year, 1-day chart. Now, when I give those time frames, the first part is the candle. The second is the time window you're looking at. So a 5-minute, 2-day, you're looking at a 2-day window with 5-minute candles. The 2-month, you're looking at a 2-month window with 15-minute candles. And then the big chart, as I call it, is the 1-year, 1-day. So you're looking at a full window of a year with daily candles. Now we avoid the wicks, okay? Don't focus on the wicks in any of these time frames. We're looking for multiple time frame alignment, breaking out on the intraday, the 2-month, as well as the 1-year chart. And so if it's breaking out on all 3 of those time frames, then that's gonna give you a much higher quality breakout with much, much, much higher probability of success. So it's really that simple when we're talking about breakouts. Now you'll find, if you start using this tomorrow, you're gonna find there's not that many of those, especially in the afternoon. And you might be, I know I've touched on this several times in this video, you might be like, oh, that sucks. What if there's only one? What if there's none? But again, I can't stress it enough, my friends, over trading absolutely decimates new traders. Because they think if I made $100 on that trade, well, hey, and how many of you have done this math? I used to do it. You make $100 on a trade, and you're like, if I make 5 trades today, it's $500. What if I make 10 trades today? What if I make 100 trades today? And I've done that math. I don't do it anymore, but I see a lot of people doing that. But you got to understand, losses are part of the game. And listen, maybe you got lucky. I don't know what the trade was, but avoid falling into that trap of thinking more is better. Less is more. It builds confidence. It increases your odds of success. And the best way to grow a small account into a medium or a big account over time is consistent, high probability setups, recognizing where the breakdown is and moving on for a small loss, and just wash, rinse, and repeat day after day after day. Now, it might sound monotonous and it might sound boring, but again, a lot of new traders turn trading into a video game. They want action, they want to be in and out because it's fun and it's cool, and guess what? 90% of traders fail. So don't do what the 90% does. 90% treat it like a video game. They want action. The 10% are very selective, very focused, and they only trade when the best opportunity presents itself. So, next question is, how do you identify the best opportunities? Check out the link below, guys. Daily Income Trader System. I go live twice a day. Matt Monaco goes live. Bryce Toohey goes live. We do all these live webinars using scans, using tools, using the multiple time frames to identify the best breakouts, and the best way to learn them is to learn them from somebody that's been seeing them for decades. So check out that free webinar, and I'll see you there.